This is your last margin call. Our guest this evening is Paul. Tonight is our 2020 ER series, presented by Cheddar Flow, a modern options order flow platform. Track and monitor option activity that helps you uncover institutional money flow, all in real time.
All right, we are starting off another series of Last Margin Call Market Mixology. We have a special guest with us today. His name is Paul. You can find him on Twitter. He'll give us a little bit more in depth on where you can find him at specifically. But the reason why I wanted to bring him on here is because this man actually inspired me to start the whole ER series that I had with his World Series of ER. I randomly just found him after I was kind of posting on that, and so I think it's been a couple years now I've actually been following you, so a weird stalkerish thing. I don't know if you even knew that before we did this interview, but I loved what you were doing. There was no shame in what you were posting. It was just, here's my play, here's, you can take it if you wanted to, and I kind of really respected that just a lot when it came to that. Just you see a lot of people that would post after a play happened, like, yeah, we took this after an ER play, and only my room got a hand of this. But you were just straightforward the day before. You know, I'm running some butterflies, I'm running some iron condors on this, I'm running some verts on this, and you had just a wide variety of just different types of plays that I just like. I kind of like fell in love with the fact that you just be open about it. And you know, I even took some of your plays, so like they were good.
You make money?
Oh, I did. I think I remember I tweeted you that like almost a year ago too, and I was like, I really respect you for doing this, to be open and honest about this, and you responded the exact same way. You asked me if did you make money, and I said, hell yeah, I did. I made some money on that. So
Matters.
so I've been a part of a couple rooms, and every single time that we do this ER thing, I always post your ideas and a couple of my ideas as well, to give anybody that I'm with or, you know, helping out at the time just an idea of the different styles that you can use with options to make these plays. And it doesn't always have to be directional. And I think that's the big thing that people just say, you know, I'm going to grab some deep out the money calls, deep out the money puts, and we'll see what we make money. But you came at this with verts, butterflies, condors, back ratios, all these other different things, and I think that's what drew me to make sure I got you on the show and wanting to talk about that. But before we talk about that, with this show, we always talk about what we're drinking for the evening, and we always want to kind of just expand your knowledge and make sure that you have a good time while you're listening to us. Maybe even pause the episode for a second, make the drink that we say. So as always, we'll start off with Bear. Why don't you tell us what you're drinking for the evening?
Okay, Tim. Tonight I'm actually drinking alcohol. I've upgraded from my carbonated bubbly from Target to
All right.
one of the finest beers on the planet. You can't really get much better than this. It's Milwaukee's Best Ice. Comes out to about 40 cents a can.
Nice.
Top of the line, top shelf. Yeah, that's what I'm drinking tonight. It's fantastic. It's delicious. Goes great with pretzels.
You never cease to amaze me when it comes to this. It's just, you can't just even just buy, go back to your rum, your whiskey that you have, just something to just kind of just tilt the scales into more of the classy end, but you go with Milwaukee's Best. All right.
This is classy for me, Tim.
I know.
Sorry you have to,
it's those Ohio
40
boys.
minutes making a drink to feel good about yourself. For me, Milwaukee's Best Ice is where it's.
Well, you know, when you lose your chance to play in the national championship game, I think you kind of just have to degrade yourself down.
Didn't you lose your chance like the first game you played?
We don't talk about Michigan State like that. They try really hard.
Does Michigan State even have a football team?
They try really hard, and that's all that matters. All right, they have heart, and that's what we keep telling ourselves.
Basketball players and put them on the football field in jerseys and hope for the best.
Just for publicity. It's just like, like here comes the basketball season. So
Okay.
Screw you.
Art and
All
Tom
right.
Izzo will get you an invite to the Cheez-Its Bowl next year. So you keep on that, man.
Damn it.
Jesus, Bowl now we're
Keep
talking.
going.
That's where they serve Milwaukee's Best.
I always wanted Kohler to sponsor the toilet bowl. Just like the two worst teams. Just had the two worst teams. You might have not won a game.
6
all
and
year
6 is respectable to some
even
degree.
Where is
Not
that
even that.
respectable?
It's never respectable. I'm trying to find excuses to justify their poor performance every year, but that's fine.
Invite the two worst teams in. Find the two teams that have the 1-9 record. Here's your opportunity to turn the program around. In the Kohler toilet bowl.
We face some like team that's like North Dakota's community college or something in our bowl. I have no idea who it was. It was just completely irrelevant. So we just don't even pay attention to those. It's like once October hits, it's basketball season.
Look, if you really wanted the toilet bowl, you just have to have the University of Michigan play Michigan State. Full-on toilet right there. It's like a urinal playing a toilet.
You stop that right now. I can't do this. I can't even do this right now because I would just get so angry and it was just like 45 minutes of just pure rage. So we're going to transition this over to...
I spent 2 days in Detroit and I spent 11 months in Afghanistan. And I'd rather go back to Afghanistan than go to Detroit again.
I hate you. I hate you.
True story.
True story. Screw you, all right? Detroit's a good, respectable city. We're up and coming, all right? But anyways, Paul, what are you drinking tonight?
Well, I have decided to go with the Moosehead Canadian Lager this evening. My favorite beer in honor of my first podcast that I've ever done. So, special occasion for me, cracked open one of the favorites tonight, and it's not something you can easily find here in Texas. So, it was something I kind of worried about finding out when Trump went on his tariff raid a couple months ago.
Oh, boy.
You're not going to find anything over there. It's just Milwaukee's Best and Coors Light are the only thing that's going to be available throughout for all this.
What else do you need?
Of course, it's good for you.
You can't tariff water, you know?
Fair enough. All right, so basically what I'm drinking this evening, since this is the start of our ER series that we're having, I went out, we did this show with Connor last night, and I went out and got that bullet that I had to have. It's a little mid-tier, it's good, it's smoky, fresh, but the drink that I made, it's just 1 part bullet. It's going to be a half part lemon juice, about 2 teaspoons of maple syrup. Trust me, I know you're thinking like when it's like a pullback when you hear that, and then a little bit of ground cinnamon, and you kind of stir that up, and you got this great ass drink. I don't even know what to call it right now. I'm probably just calling it, Clemson's probably going to win the national championship game, but
It's going to win the
You should call it Milwaukee's second best is what you should call it.
What is your go-to score for that national championship game?
I like LSU 45-28. I'm trying to take as much of an unbiased opinion, but I just think you got Burrow, you've got 3 wide receivers back there, you've got a stable of running backs. I like LSU in this game. I'm
gonna say, here's my pick, and this is why I'm going to be right, because it's just a natural gift that I have of always being right. It's 28-24 Clemson. I know that's a little controversial, but I think Trevor Lawrence emerges as just a god of college football. I think Joe Burrow puts up ungodly stats, and this man just like completes every pass. But I think Clemson's going to control the clock a little bit, and I think that's going to be. I think LSU's going to score. They're gonna run down the field, but I think Clemson's clock control is going to be what sets them apart. Let's
just hope the refs that were at the Ohio State game are the ones that are, for LSU.
Here we go.
That's all I'm saying. Hey, just be careful, if Joe throws a perfect pass, your guy catches it, doesn't move the ball on both hands, takes like 15 steps and happens to drop the ball, it's going to be incomplete. Just so. And heaven forbid if a 6-foot guy somehow puts his helmet into a guy who's 6'6". Oh, it might be called targeting because he clearly tried to get him in the helmet. Come on.
So much anger from
targeting at LSU. I mean, go ask Devin White about what happened with that when he just pushed a player. Instant targeting. Be gone. So,
Okay. It's the stupidest rule ever. We know it's football. It's like people are gonna get hurt. Okay. Come on, whatever.
All right. We'll transition from there. Oh, we have our scores
I'm
set
gonna
for the.
teach my kids to target. That's what I'm gonna do.
You're the reason there's a problem, all right? That's what it is. All right, so we're going to transition over into basically what we're doing for this whole podcast. It's an ER series. Before we do it, since we kind of didn't really give Paul the proper introduction, we're going to let Paul introduce himself, tell him a little bit about his background, where he comes from, how he got into trading, where you can find him. If you want to follow him, follow his ideas, I highly suggest you follow his World Series of ER. Not only is it just fun, it just gives you a different perspective to take on ERs outside of just YOLOing calls. And from there, I'll let you take over, Paul. Just tell us exactly what you want to tell us, and we'll go from there.
first off, LSU, we coming. That's all I'm gonna say about that.
Oh my!
Okay. So,
With a Buckeye
What about
leading
LSU?
them.
hey, well, no, that red. Well, you ask Alabama where that red's at, huh? So, I am an LSU grad. I graduated from finance in 2012 from Baton Rouge, Louisiana. I originally got into trading when I was a sophomore in high school back in 2006.
Oh, nice.
And so during the summers, I would educate myself on, stocks, how to value a stock, what's an income statement, EPS, what is that? So then I started branching out into learning about bonds, and then I found out about these things called derivatives. And so, me being the egghead that I am, I go online and I go purchase a graduate level textbook on options, which I still have to this day, and I'm actually looking at it up on my bookshelf.
Okay.
Options, Futures, and Other Derivatives by John Hull. Greatest book you'll ever read on options. Ever have any academic questions about, how an option is, what is theta, how to start piecing together a trade on, having something delta neutral. That's the book to have.
Okay. All right.
So I read that book for a while, and then I did my first trade for options in my high school library in March of 2008. And ever since then, granted, I blew an account out about 3 different times, but after I finally got my act together, I started learning proper risk management, learning about entries and exits, had some good timing on some things. Eventually, when I got that down, I started getting introduced into, how to properly trade earnings using options. I took a strategy, and I kind of tweaked it to my own strategy. A room that I was in several years ago kind of helped. They did a little bit of earnings trading, just not much. But then I started thinking about earnings overall and about, we're trading an event. And we're basically trading, a catalyst at a set point in time.
Mm-hmm.
And so I started to develop, a strategy about, okay, how do you A, manage risk, B, control the outcome as best as you can, and C, how do you just overall just have a higher success rate if you were to do the same trade on the same company, 10 different times. And so from that, I started to just develop a strategy, just put it down on paper, and just run it from cycle to cycle to cycle. Now, granted, things change from cycle to cycle. And so that's just me. So my trading basically went from, a guy that went from, just being the basic novice to, blowing an account out and learning some lessons the hard way, to being able to learn how to utilize strategies like unusual options activity, and then applying stuff like that to trading catalyst events like earnings, and then doing all that, and also having a full-time job on the side too. And yeah, I'll leave it there. And if you have
oh yeah, trust me,
I got a question on this.
Okay, yeah, go ahead. I'll say
2008. You're sitting in your high school, backwoods Louisiana. I'm assuming it's a one-room high school. There's one chalkboard, maybe half a computer. Would you make your options trade?
Do you remember your first options trade when it comes to this?
My first option trade was on the E-Trade April 3 calls, and I paid 60 cents for those options. Next day, I sold those options for 90 cents.
Hey,
Damn,
there we go.
You were the richest man in Louisiana.
I bought a 5 lot of that. I was strutting up and down the hallway.
There you go.
Man, it was great.
Dude, that's amazing that you actually remember your first trade. I don't think I can do that. That's awesome.
That was my first bona fide options trade. I remember that. That actually happened on the Friday right before. Was it Lehman? Yeah, it was Lehman Brothers that failed.
Oh, jeez.
Friday before. I remember looking at the stock chart. That stock was down like
just like top tick that.
And I remember, I think it was Pete Najarian or somebody came on TV and said they're buying the 8-strike puts, and this stock was trading at $22 at the time. They were just coming out and buying like the 8-strike calls, or maybe it was Bear Stearns or Lehman, one of the two. But yeah, the next Monday they were bankrupt, and those 90-cent calls were marking 30 cents the next morning. So,
so you did pretty well for yourself.
There you go.
All right, sorry.
Yeah, pretty damn good.
Sorry to derail it. I needed to know. When I was in high school, I was,
tipping cows and whatever you do.
Yes, Tim. We had cattle walking around our high school.
I wouldn't doubt that one bit over in Ohio.
We actually did have a cornfield for the school.
See. So we have just how you started off your first options trade, but more importantly, like the whole point of this whole thing was to dive into once ER hits, how things change for you. What I want to know is when ER season is around the corner, just like next week, banks kick it off. We're about to dive right into this. How does your mindset change? Going into this, are you stopping all other plays and just focusing on ERs? Are you waiting for them to play out then playing? A lot of things can go into this. Are banks going to determine the rest of ER season? I'll stop it there for right now because it's a loaded question as is, and we'll just build off it from there. But maybe you can dive into that a little bit.
Well, first off, I have a full-time job, in corporate finance, and so for me, my day job takes up a huge amount of my time during the day. It's not so much that I can just sit here and just watch the tape, and just watch my scanner with all the unusual options trades come through. Earnings are an opportunity for me, to be able to A, trade, and B, keep myself refreshed and reprised up to what's going on to the market. So earnings season is that time for me to make a little money, kind of refresh myself and just kind of, just ground myself a little bit to just keep refreshed as to what's going on in the market, what's going on in certain industries, and, kind of think about what it is I want to be structuring in my long-term account too, because, whether or not we realize it, as option traders playing an earnings event, we look at the headlines, right? We notice, we know who's beating earnings consistently. We know who's raising guidance, who's raising dividends, and stuff like that. So there's that. But, coming into the advent of an earnings season, the first thing I like to do is I like to just backtrack a little bit. I like to just take a few notes for myself and during earnings season and looking on those from the prior, cycle and going at it. And so, I look at what did well. Did I do well in banks? Did I do well in tech? Usually a pain point for me is trying to figure out what the fuck retail's going to do at any point in time. And that is the hardest sector for me to trade, at points of times. And so I'm kind of looking at that. And then I just take a top level view. Is the market hitting a new high? Are we hitting new lows in, certain sectors versus others, and then I'll look at it and then I'll just take it week by week at a time. What I'll do is I'll just come in on a Sunday when the market's closed, nothing's moving, there's no changes in the options markets. I'll go in and the first thing I'll do is I'll go down and I'll look at all the ticker symbols that are reporting earnings. And, having done this for, 4 or 5 years, I can just cherry pick the ticker symbols off there. Right. And I'm basically just planning my week out like that. I know on Tuesday, I'm going to trade the JP Morgan. On Wednesday, I'm going to be trading the Citigroup. On Thursday afternoon, we're going to be getting long Intuitive Surgical. Nothing's wrong with that. And you've also got that memory. Having done it for so long, you already know that, Intuitive Surgical is one of those bullish names. It's one of those names that has the propensity to, gap up, after earnings events. A company like a Wells Fargo, for example, you've always historically you've been short that name, and it's a name that doesn't necessarily fly, 2 or 3%. It just sit there and it might move like 1% for something like that, from example.
Right.
So, looking at the market from a tops down approach, what are we doing overall? Going by a sector, and then looking at it on a week by week basis. Don't look at if Apple's not trading earnings this week. Don't ask me about Apple.
Right.
If Amazon's not on the Amazon, I don't know, man. I mean, so don't ask me about what Ulta's going to do. Don't ask me about what that fake meat company, Beyond Meat's going to do for earnings. I'm usually just looking a week ahead of time, and I just want to focus just on this week. Next week will take care of itself. And so all we want to do is we just want to focus on this week, and we want to structure the trades to put ourselves in the best possible position, to make money with the companies that are reporting this week.
Okay, so I have to ask then. So we have financials kicking off next week. I believe Tuesday kind of kicks it off with J.P. Morgan, Citi, and somebody else. If those three miss and it's bad, are you then taking that bias and applying it to Wednesday when Bank of America reports and all those other things? Or are you saying, no, I've heard some different reports through multiple media sources that Bank of America has done better than JP Morgan, Citi, and all these other ones? Like, it necessarily plays into a bias that, from what you've heard, what has happened in the past for the sector may not affect the rest of the sector for the coming days, even if it's early in the week. Does that make sense? I'm sorry if it doesn't. I can rephrase it.
Yeah, it does. No, it's fine. I understand the question. So, does what J.P. Morgan does affect Bank of America and affect Wells Fargo and affect Citigroup? A name that's not on here is PNC Financial and Goldman Sachs. Mm-hmm. Does that affect it? And the answer to that is I'll pay attention to it. I'm not going to tell you that it's going to affect what's going on here. It's not going to necessarily affect what I do for earnings. So we're not in the event right now. I'm going to get long JP Morgan. I'm going to buy outright calls in Bank of America. I'm going to buy puts in Wells Fargo. And I'm probably going to get a call spread in Citigroup. And we'll get short probably Goldman Sachs. And it's just because these are the trades that, I'm kind of relying right now on historical perspective and what's worked for me in the past.
Okay.
On a lot of these names. And so, you can go pull a chart up of JP Morgan and Bank of America and Wells. Well, Wells is kind of flatlining, and Citigroup right now, they're hitting historic highs right now. Mm-hmm. And there's a reason why they're hitting historic highs. I think that continues into earnings. Could I be absolutely wrong? Yeah. JP Morgan could be down $10 the next morning, on earnings.
Very
Same thing
easily.
with Bank of America, Wells Fargo and Citigroup. But this comes back to, when we go back on a Sunday and we're basically pre-planning our trades for the week ahead. I already know if I just blank, if I don't make money on a single earnings trade, I already know what my max loss is going to be.
Right. It's beneficial as hell when it comes to that. Yeah.
Yeah, absolutely. And it's also, managing a portfolio of these option trades too on a week by week basis too. So you've not only got to manage what the individual stocks are going to do, but you've also got to pay attention as to what's going on in the market right now. Mm-hmm. Could Iran start firing missiles at us and that sends the SPOOs down, 200 handles? Well, okay, there's something to be said for that.
Right.
Maybe I want to, maybe take 2 longs in the banks and 2 shorts just to make it work. If I structure my trades correctly, and if I'm profitable on 2, but lose on 2, if I structure my risk reward correctly, I'm still going to make money.
Right. Exactly. I think that was going to actually be my next transition to the next question is, if you're super bullish on a sector, are you playing one to the downside just to offset any possible, reason that all the You know, if you're up, if you're playing a bullish side for 3 and you're playing down 1, just in case it goes against you, that 1 can hopefully recoup some of the loss for the 3. But you know, if that 3 pops, then who cares about that 1 that just dropped? Like, do you play it like that?
All about the risk management. And will I do that sometimes? Yeah. So if I come on a Thursday afternoon and you got a Twitter, you've got an Apple, you've got a Google, and you've got an Amazon, all trading on there. Well, you know, I'm going to have to make a decision about it. I may very well just fire longs on all 4 of those names, and at the same time, I might just say, you know, Apple, you're up about $100 in the last year.
Right.
So, I mean, sometimes the trend is your friend. Looking at historical movement, and sometimes it benefits you too. So.
Look, Apple's been ridiculous.
Right.
I've made over $1,000 in the past 8 days on just buying calls on.
Just stupid. It's
two.
dumb.
I only bought
it's
2
dumb.
calls. And the first one I sold for $750 profit, rolled it to minimize my risk, and I made $400 today. It's just stupid.
It's just like, I mean, at some point, like you're just playing off the momentum of things, and then it's just like,
You know, there's a few things that are just like, I don't even. I could have bought this when I was in high school in 2007 because I graduated before 2008. You know,
smarty
made
pants.
this trade and made some money, and then I could have, you know, danced around my high school, but I had to wait till I was 30 to.
Right. Not all of us can be Pauls, though, dear.
No.
Well, Apple was $4 a share when I was in high school.
Was it? No way. No way. It was $4.
Oh yeah,
3 seconds
Apple.
of silence.
When I was in high school, Apple was like $3-4.
Oh, because it was before the iPhone, wasn't it? So that's why the big jump.
That was when the iPod came out. Yeah.
Look, all of these big name companies when we were in high school. So I bought Nvidia. One of my first trades.
Oh my
I didn't even
gosh!
know what
Wow, I'm looking
options
at
were.
that.
I bought Nvidia at $18 in my IRA that my dad made me open because I was like, "Oh, these guys are cool and
They do
they're gonna make
computers.
stuff for games." So I bought them for $18. I only bought like 9 shares of it or something, but I sold them, I think last year at $260 or something. So that was cool.
Yeah.
Held them for that long, mostly because I forgot I had them.
That's pretty damn good, though. But all right, so we have, you know, like just basically, you know, for anybody that's like listening out there and kind of wondering, you know, like, so you mentioned too, if, you know, Iran starts throwing missiles, we start throwing missiles. Let's say that happens next week on a Monday, or let's just say it happens Tuesday. You know, missiles are flying for whatever reason, and then ER hits.
So. That means I get a bonus at work.
Right. So
come on, baby.
So I mean, we have that, and so ER plays off of that. And because, are you taking a trade different because missiles are flying? Are you still sticking true to the ER report will dictate the price action of things? Or, you know, like, are you readjusting, like, because missiles are flying, I'm going to play this certain strategy, or you know, I'm gonna strangle this, I'm gonna iron condor, butterfly, whatever it takes to do. Are you reassessing based on headline news?
I'm just not going to trade. It's just that simple.
That's actually really good. Okay, yeah, go ahead.
There was an earnings cycle back. It was the Q2. It was right when the market. It felt like you woke up every morning. The S&P was up 20 handles,
Right.
and the S&P was down 20 handles. I mean, earnings were going on in the middle of this. You had a Fed announcement in the middle of this. I just said, no, thank you. I just can't control it.
Yeah.
It feels like I'm just gambling at this point. So I just decided, no earnings this cycle. So
I think that's a great perspective to have too, because if you don't have a grasp on the market overall at the time, and it just feels, whether if you have a grasp on it or somebody else has a grasp on it, like if it just feels wonky to you and you just like can't, why trade it? Like, you know, just sit out that one and move on to the next one until it feels comfortable. Right.
I mean, everybody feels like every Apple event, every Apple earnings event, every Amazon earnings event, every Google event, every Facebook earnings event is the end all be all. They're going to be reporting again in 4 more months. Just,
right.
take a seat, calm down.
True.
It'll be fine. If you can't find a good trade, you know,
It's that FOMO,
Don't
man.
worry
It
about
gets
it.
everybody. You know, everybody feels like they
Oh.
got to be in a trade constantly, and
Especially,
half the time it's better.
especially for earnings. Like you got to play every single earnings. You got to showcase that you know what you're talking about. That you can do this. That you can put on the perfect trade, and you have a 99.92% win rate on these things. Like it's a little daunting, but like the realization of it is like it's okay if you win 48% if you manage, like what Paul said, if you put your risk reward to the perfect ratio that no matter what happens you come out on top. If
Alright,
those
so
go ahead.
going with that risk and reward, Paul, I know that you said that a lot of this earnings season, what you're going to do is you're just going to either be buying straight up calls or puts.
No, not necessarily.
No?
We'll just take it on a case by case basis.
Okay.
My strategy is really very heavy spread oriented.
Good.
Okay, that's what I was going
there's
to
a-
ask you. If you could go a little bit,
Yeah.
Just for people that are listening, we try and do, Tim and I trying to educate people as much as we can on how to use spreads and how to use verts and iron condors and all these things, just so that people understand that there's more than one way to play options. So if you could kind of expand on that a little bit for us, just off of your trading in the past and maybe how you'd play some of these ERs using some of those, I think that'd be helpful.
Sure. So when I approach, let's just say, I'm coming in on Monday and I'm approaching a JP Morgan. The first thing I'm going to do is I'm going to look at the money straddle for that week.
Mhm.
All right. I'm looking at just earnings that I can trade weekly options on. I'm not looking to, take positions in these earnings and hold it for, 2-3 weeks at a time. I want to get into the option. I want to play the event, and then I want to be out. Win, lose, or draw. It's just like that. You're going to see me, in the World Series of earnings. And the reason I call it as the World Series is because you're going to see me take about 60 to 70 trades a cycle, if not more.
It's a lot of trades.
My peak, I think I took like 115 trades one cycle. And the reason was because I had an advantage. The market was consistently hitting new highs, and so buying call spreads was just working in and out, time after time after time, for things like that. But every earnings cycle is different. But the way I approach it is I just go in for a company that has weekly options, for example. I'll go in and I'll price the money straddle. That'll tell me what the market thinks it's going to hit on the upside and it's going to hit on the downside. I'll go in and I'll look, okay, historically, in the past 8 quarters, it might have gone up 5 times, down 3 times, but on average, it'll move 4%. My money straddle is going to say, okay, for this earnings cycle, it might be pricing in a 6% move versus a 4% move. And so the options may be, implying a little bit of a higher move on average. Well, that's all fine. There's ways that we can use spreads to take advantage of that higher, higher priced volatility that's priced into the options. From that perspective, before I even price the trade out, I'll go ask myself, I'll go look at the charts and just say, okay, so I used the Ichimoku Condor. I mean, the Ichimoku.
The Ichimoku.
The Ichimoku cloud.
Look, we're not Japanese.
Yeah.
Well, I hear you, but
The itchy.
It's Ichimoku, like Ichimoka chocolate.
Ichimoku.
It's the
Look,
Ichimoku,
it's
actually. But I just call it the itchy,
Ichimoku
okay?
cloud.
It's the itchy cloud.
Itchy cloud. You don't want to touch it. It makes you itchy.
using the iCloud for all you Apple longs out there.
There you
I'm
go.
using the iCloud.
There we go.
Go
I'm
ahead. Go.
looking at that on a daily basis, and I'm trying to figure out, okay, is it above the cloud or is it below the cloud? And how is that cloud trending? It's going to tell me, okay, it's trending positively. And then I use another indicator that's called the market webs. I used to be a member of the Tribeca Trade Group. They do a fantastic job, I feel, over there. They have this wonderful indicator called the market webs, and it tells you some specific volume,
Is that
weighted pricing.
Is that with Fromhertz, right? Christian Fromhertz? Yeah.
Fromhertz knows me. He let me on the mic a few times to his disadvantage and probably to some of his advantages. He probably left.
Frommer's is a good guy.
They let this loudmouth guy on from Louisiana. So look, if you find that the podcast subscribers numbers going down, look,
this is where it started. It's all because of Paul.
All me. So
I knew it.
So there's that. So indicators, and when they're both in sync, and I'm kind of looking to just say, okay, if the stock were to pop, what are some possible price targets where it could pop? So I'm looking at that from perspective. So I'm comparing those price targets to what the at the money straddle is being compared to, and I'm saying, okay, it's doable. So in JP Morgan right now, when I'm looking at it, next week's straddle, which I expect to be at $4, is at $4. This is about in line from what I'm expected. So the stock's either going to be at 133 or it's either going to be at 144 by next week's expiration.
Mm-hmm. Okay.
So, if you put a gun to my head and you said, look, you got to get a price to trade out right here, I would be buying the 139, 141 call spread for the serial January expiration, and I'd be looking to pay 65 cents for that trade.
That's not okay.
That would be my trade right now.
That's awesome.
So I'm risking 60. So I'm risking 65 cents to potentially make, $1.35. So better than
it's a 2-to-1.
2-to-1 risk versus reward.
It's better.
So
yeah.
All right, sold. I'll take it right now.
Tomorrow it's being put on, and you will be put to blame for everything.
But the problem is it's bid marking at 66 cents right now. So we might want to see a couple missiles flying just so we can bring that in.
Just to bring that down just a little bit further.
Let me call Trump real quick.
Hey, gotta call him. His name's Burrow.
He'll be throwing some missiles, am I right? Hey.
There we go. Okay. All right. Okay. A little too far, Tim.
I'm sorry. There we go.
All right, so
go ahead.
Yeah. No, I just wanted to, we just talked about spreads a little bit, and you talked about straddling it, and I'm wondering, do you ever sell for premium, or is that something you don't dabble in, or?
So, answer's yeah. And so, kind of just looking at the different types of structures of trades I'll take, in a typical week, for the Monday and Tuesday options, for the Monday and Tuesday and Wednesday releases, I'm talking about Monday after the bell, Tuesday before the bell, Tuesday after the bell, and then Wednesday before the bell. I'm doing my very best to just take straight, plain and simple vertical spreads rather. So just a simple buy a put, sell a put. So just legging into spreads, just like that. Later in the week, I'll open it up and I'll start to look at butterflies, and I'll start to look at condors and iron condors. That also includes iron butterflies and iron condors in the rare occasion when that'll make happen. But when I put these spreads on, it's very important that I have a predefined risk versus reward requirement that I've got to have. And so, on verticals, for example, my favorite types of trades are to take $1.50 wide verticals and to pay no more than 45 cents for them. And I love buying 10 lots of them. And so, Discover Financial is one of my favorite names to trade. I always get short Discover Financial.
Okay.
Always Discover Financial.
You just lost us a sponsor. That's fine, but go ahead. Yeah.
Well, not that great anyway. So
we didn't want them as a sponsor.
Yeah.
Anyway, they got that ugly purple and orange like those other people that are going to show up on the dome on January 3rd.
Oh, I see.
We don't want none of that.
I knew it played back into something, but now we know. Some tigers.
This is DFS, right? Is that the ticker?
Is it really?
DFS is the ticker, right? And so it's not a name, it's a name that I don't know why it has weekly options, because it doesn't trade a whole lot of weekly options. Quite frankly.
It's pretty weak.
It's pretty weak. I always question about why the hell do they have weekly options? Nobody ever trades them. But anywho, what I'll usually do is I'll come in. I have no idea when they're reporting earnings. It's not next week, that's for sure. But usually what I'll do is I'll come in. for $1.50 wide put spread, right? I'll basically be looking to put that spread on for 45 cents for a 10 lot, for example. I'll take 5 off at 90 cents. I'll take another 3 off at $1.25, and then I'll leave 2 sitting out there for $1.45.
Okay.
I can't tell you how many times that you've woken up the next morning and that spread's fully in the money, and you're taking that whole 10 lot off for $1.25, $1.30, $1.45, and all that. And on the reverse side of the coin, if stock just doesn't go your way, well, like I said, you've already defined your risk in the trade.
You're already okay with it, yeah, and you're already okay with it because you put on that trade. You're not flipping a coin and hoping you get it, yeah.
And if you really want to look at it from that perspective, I lose on that trade, I've got 60 more others in line that are coming down in the next 2 months.
Right. There you go.
And it really is the truth. You might have some people on your podcast that might play 1 earnings per day. They might play 1 earnings per week. It's okay if you don't do it. There's more coming, and it's not going to be your last earnings cycle.
Right. You got four per year.
4 per year. As long as God will have you on His green earth. So
yeah, exactly. I mean, there's going to be multiple opportunities to handle all these things. So, if you mess up on one, just don't go all in. Define what you want and make that play reasonable. And I think when I saw you and this whole thing happen, with this whole World Series of earnings, is don't be afraid to put on something just to make money too. Who cares how much money you make too? You're not trying to please investors. You're not trying to please somebody. If you're making $10 off that trade, but that trade is at a 90% probability of, if you're talking DFS, that shit is not going above 90. That shit is not going below 75. But you make $10 off that, why not? Just take it. But if you want to get a little bit funky with it, and you want to put on something that could better your odds, and better your return, put that on as well. I think that's the main thing, and the fun part about earnings is it's a chance to showcase what you know, and a chance to really do something crafty. I don't even know how to put it. It's just something you can utilize your knowledge and make however much you want, depending on the underlying, essentially. But
and it's earnings are really the only time you'll see me ever just outright buy a butterfly, buy a condor, buy a skewed iron butterfly that might be a little bit out of the money. We did that in CMG last earnings cycle, and that was a pretty successful trade for us. But I mean, those are the type of structures I think that really work, on a shorter time frame. Don't expect me to buy a butterfly in Amazon out in March. That thing will. Number one, it marks like crazy.
Yeah.
Number two, if you've got a, going back to my academia there, you've on time decay at somewhat. You've got 2.5 months of time decay to go, and
yeah. I've seen a couple of people that have done that Amazon. Too. I noticed some people put a $20 $20 between losing money, $20 out, so you get $40 in between essentially for their butterflies on these Amazon plays, and they're 4 or 5 weeks out. I'm just you don't know that's gonna happen. Why put that on? And they're just just based on the chart and what's gonna happen, and just that's. I feel the time to use spreads, the time to be a buyer or seller of premium, always comes down to ERs and these exact points, the butterflies, just anything that strangles. You could play worldly events or anything, but just you kind of have to know what you're getting yourself into, and not just put it on because you think what's going to happen, but you need to put it on because it's defined by the underlying, essentially. A lot of we had Connor on the other day that said ATR, an average true range of things. If this is not earnings and this plays to the average true earning or average true range of things, and you're buying a 500% move that it only by end of week, and it only makes a 0.5% every week, know your symbol. Know the stock itself. And I think that's a great tactic to use going into earnings. Like AMD, like you shouldn't be buying 50, 60 strikes because you just think it's going to make a big move. It just, and that's why I liked your World Series thing, because you played realistic plays that made sense, and it wasn't wild. You know, like, oh, here AMD is doing earnings. I bought 30.
Just blindly bought calls.
Yeah, I bought 300 calls on the 60 strike because I just think something's going to happen. And it's like, great, you're going to get Ivy crushed.
Something's going to happen too. I mean, I only spent $350.
Exactly. Except you're probably more likely to make money than those people that do that. Go ahead. Sorry.
It's not so much that. It's just that I worry about what happens if I blank.
Okay.
That's the first thing I'm worried about. I will tell you, the Q2 earnings cycle in May of 2018, in the back half, when the back half of the tech and the retail started reporting earnings.
Yeah.
I went on a run like I never ran before. In 20 something earnings trades, I made money on one trade.
That's big.
But if I was sitting there and I just had to take a step back. If you were just buying outright puts and calls, that would have cost you about $25,000.
Yeah.
Yeah, you took the loss, but you took a manageable loss. And that's all we're trying to do.
Yeah, you knew what you're getting yourself into. You didn't put on something as a coin flip. You didn't put on anything because you thought something was going to happen. It's like, here's what I'm willing to lose. Let's see if it plays out. And sometimes you get non-directional spreads that come on there where you just don't even care what it does. Like pop, stall, drop, whatever, as long as it fits within your range, or you only care if it stalls or drops, stalls and pops, like when that happens, like when that happens for you, like I know you said you take a step back away from that. Like, are you discouraged to put on another play, or are you kind of just being like, it doesn't matter, I fit my risk reward thing. I'm never going to risk more than I had to lose, so I'm okay with putting on another trade, right? Or
I'll either adjust the sizing of what I'm trying to do. I might just cut all the dollar amount of the sizing of the trades that I want to put on, or just like the time when I walked away from earnings, I can just choose to not trade earnings.
Yeah.
I don't have a trading room. There's nothing contractually binding to make me, force me to trade earnings. It's just, do I want to? And so, yeah.
All right. Well, and then when it comes, I know you talked about this a little bit earlier with the options activity. We talked about this with Connor before who came on yesterday, and he was talking about options activity leading up to ER and beforehand. And he kind of gave us this perspective of it's good to see how things are, but don't put all your eggs in one basket type mentality. He expanded a little bit more onto that. But how do you view options activity leading up to it, the day before, the week before, months before that date, beyond the actual ER itself?
I usually think that the shorter term activity is more likely to pollute your thinking than it is to benefit you. On the whole, there have been some times when it's actually benefits you, and there are some specific examples that I'm going to cite very quickly. But I'm usually looking out a month ahead of time before earnings. Like, I'm looking at the activity. I started looking at UOA activity, leading up to this earnings event, right around, the week before Christmas, just to see, okay, what trades are being placed right now. Sure enough, in Amazon, a couple weeks ago, we saw a very big buyer at 5,500 of the February, I forget what strike call was it, but somebody put $28 million to work on the long side. And so I'm telling you right now, I'm biased to the long side into Amazon.
Okay. Hold on, what strike was it? Just
Unless-
just so I can remember that real quick.
Let me go. I got my thing.
Because I'm feeling a little. If someone puts down that type of money on that, like I feel a little bit like that. That's especially for options. You don't get those types of.
Yeah, I can at least match that amount.
Yeah, you might as well just match it. Like maybe I'll throw down 30 mil, just to kind of like showcase just a little bit.
I think it was the February 1820 strike. I have to go back and look. I think I flagged a trade in one of my notebooks there, but you have $28 million of premium, in the books.
That's
And also in Amazon, just nonchalant, $28 million just flowing out of there.
Mm-hmm.
In Amazon, there have, especially last year, the day of earnings, somebody just comes in and starts buying, just buys like an outright 600 block of options all the way out, 9 months ahead of time, and they're paying like $63 a contract times 600, so
Mm-hmm.
putting like $36 million to work. And I'm sitting here with a short position, and what did I do? I took the short position off and I went long, and it worked.
Yeah.
So, but the thing you have to realize about earnings too is that when you see these big institutions come in and they're they might be buying a 5,000 lot of puts, right?
Mm-hmm.
It's entirely possible that they could be hedging a long position. They could be hedging,
Right.
Exactly. They might be outright speculating. The 3 times that you find yourself trading an option are to, number 1, speculate, number 2, hedge, and number 3, for any type of an arbitrage type of situation. And so I tend to not look so much at the shorter term activity as I want to look at, trends longer term. What happened a month, 30, 45, 60 days ago? Were there any big buys? Was, open interest increasing more on the long side versus the put side? So I'm kind of looking at trends like that too. But is it totally going to steer the direction that I play for earnings? And the answer is no. I rely more on the historical movement and what my success rate has been in that specific stock, either playing it from the long side or the short side. I want to rely on that, rely on technicals, and if I've got those 2 things in my favor and I can put a favorable reward to risk setup in play, then we're going to do that all day, every day.
Okay, awesome.
All right, so we've pretty much gone through everything we wanted to. Paul, just want to last thing, kind of throw it out there. Do you want to give? Obviously, I know we said this at the beginning, or I think we did, that none of this stuff. We're not financial advisors, so if you're taking these trades on anybody that listens to this, that's on you. We're not telling you to take them. But Paul, do you want to give us a quick last rundown? I know you've said a few of them through this, but a last rundown of plays you're going to be making for next week?
Or just directional bias, just anything that you have, not necessarily the actual strikes themselves either, though.
Give me a name.
J.P. Morgan or Bank of America. Let's do J.P. Morgan and Bank of America. Those are everybody knows those. They'll trade them.
So 2 different structures here. So I'm just going to kind of walk through it for you live here on air. So I know J.P. Morgan has about a $4 move per average. That's about a 3% move plus or minus every day. I'm used to J.P. Morgan actually reporting on a Thursday or a Friday, so it's kind of surprising for me to see it reporting here on a Tuesday. And so just kind of refreshing back there, Monday and Tuesday. So our Monday, Tuesday, and Wednesday reports, we're going to be try to, as best we can, to trade a straight vertical. So that's probably what we're going to be looking here. I like JP Morgan to the long side.
I do too.
Banks
I do too.
Banks historically, if you go and you read the headlines of the banks, right, they might have an EPS estimate of $2 per share, and they'll report $3.48. I feel that they just blow it out of the water every time. The interest rate environment is it's not low, but it's not high either right now, all things given. So the charts, as you know, are incredibly bullish. So I'm looking to get long in JP Morgan. I like my, trade I stated earlier. I think we said we were going to do the 139, 141 call spread. And all else equal, don't that's going to be the type of structure that we're looking there. We're looking to take some type of a $2 wide call spread, maybe a $3 wide too.
Okay.
If I go 2 wide, I'm going to look to pay 65 cents or less for that. If I go 3 wide, I want to not pay more than $1 for that trade.
Okay.
Ideally, I want to try and stick around 90 to 95 cents for that type of a trade.
Okay. Are you carrying that over to Bank of America as well? That's not necessarily the spreads too, just to make sure that was clear, because $3 spread on Bank of America is like 10% or something. So obviously, but like the same type of bullish nature for Bank of America.
Oh, if you compare, a JP Morgan to a Bank of America is a name that the options are just always historically cheap on the name, and so
exactly.
Just looking at it right now, the January strikes are a little bit cheap, and so I might be looking out to the February 37 calls here for, and I probably would pay 28 cents. I just hit the ask.
Okay.
On those right there. A simple 10 lot, for $280 right there.
That's not bad.
Nothing wrong with that.
Yeah.
Bank of America from time to time has just been known to, go up $1. If that stock moves $1 right there, that trade's going to work.
Yeah. Well, I know a lot of people are going to say this too as well. So I just have to say, like, when you put on these trades, are you holding till expiration? Because a lot of people are always, it's just the mantra that everyone has, like, like, are we going to ask you, like, hey, are you going to hold this till expiration or anything? Like, if you get that pop right away, even though it's February, are you taking that off within the week, within 2 weeks? Like, are you
looking to take it off? I'm looking to take it off within 2 weeks at the very max.
Okay.
At the very max. That's type of a position where, if I find myself in a position where those 28 strike calls are marking like $1.10 or something like that, I'm just inclined to just click my mouse and just move on.
Okay. Yeah, perfect. I think that's true too, because the further time you give to as well on that, like the less you're going to be damaged by any pullback movement or whatever in the underlying itself too. So I think that's good, a good tactic to use.
Just remember, on the verticals, we want to put a 2-to-1 reward to risk. On our butterflies, we want a better than 6-to-1 on those types of things. On the condors, because we have, a little bit of a wider, error, shall we say, of where the stock can end up by expiration, I'll put a 4-to-1, reward to risk on something like that. So.
Okay. Awesome. This is the reason why I brought you on, is strictly because of this, because your knowledge on spreads, putting them on, you're like no fear whatsoever. A lot of people have a giant fear of just stating positions, and I love the fact that you're just willing to say exactly what you say. Like, if I'm not putting that on, like, this is why my criteria for putting those on, those things. I think that's perfect. It provides full transparency. It gives you more credibility in my eyes, and I think if anybody doubts you, moving forward, I think they're kind of crazy when it comes to that. But I want people to know where to find you at. I want people to be able to follow you. I gave you a shout out like a couple months back just to make sure you got the recognition you had.
Yeah,
but
I remember that.
But if
why the hell is my phone going off? I'm trying to watch a damn movie.
I think I got you like 100 followers for that, so I was really hyped about that.
Oh, well, thank you.
I tried my best. I'm sure it ruined the movie, but it's good though. But I want people to know where to find you at. So if you can let them know wherever it is.
Twitter at Paul Medica. So that's my first name and last name. That's PaulMedica. Okay. You're probably going to find in the off season and during our new season LSU stuff on there. Look, just keep scrolling. I'm sure you'll find something you'll like on there. So yeah, I mean, there's that. Every once in a while, you'll see me put out you'll see me putting out a trade based on unusual options activity. So
yeah. I think you personally are a must follow when it comes anywhere time near of earnings, just because of what you do for that World Series of earnings. So I can't thank you enough for coming on, taking your time out for the evening, recording this with us, and just even doing that. Seriously, like, I mean, it's great freaking content you provided, number one. And just the expansion, most people only know calls, puts, and hopefully when people listen to what you've said and what we've said, and it just expands their mind to want to search into more. We have a few more guests lined up next week. They're going to be tackling a few of these other things. It's a big stage to follow, especially after that, I feel like. So I can't thank you enough, Paul, for coming on, and hopefully when we do this again in 3 or 4 months, I would love to have you back on. So be prepared for another invite when it comes to that, and if you want to do that, you are more than welcome to come back on.
Absolutely, I'll be here.
All right, thank you, Paul. Thank you, Joe, for coming out. I do appreciate this, and we will see you guys next week when it comes to, I believe, just the overall market is just going to have ER next week, so we'll be recording something for that, though. All right.
Thank you, and good luck to LSU.
Hey, it's coming.
There you go. All right.
Hey, either way, my money's on the Tigers.
Yeah. All right, good night, everybody.